Happy New Year, Shane, and Happy New Year to all of our Simplifying Investing listeners as well.
You too, me. Thanks for having us back.
It's only been 3 or 4 weeks back, I think, and I feel like I've been watching, 100 episodes of this Keeping Up with America reality TV show.
Is it a comedy or a reality TV show?
Some people say it's pretty tragic. I mean, it's pretty sad.
Minneapolis is certainly pretty tragic. But beyond that, it seems like a comedy.
I feel like it started with a lot of the attacks on the Fed board, basically the FOMC board that's responsible for setting interest rates. The Trump administration clearly wants lower interest rates, but some of the
Why would that be? There's an election coming up, so they always want lower rates when election comes.
Yeah, even the Australian government wants lower rates, but the US government has been very vocal about that, and I think they basically started the year by attacking personally a lot of the Fed governors, including Fed Chair Jerome Powell. They wanted to kick him out.
That's because even though his term as chair ends in May, his term as governor extends to 2028. So unless he goes at the same time as he steps down as chair, then he stays in his seat, and it gets a lot harder for the Trump administration to get control of the Fed board, who has 7 members.
Yeah, so I thought it was very entertaining that Jerome Powell, who has been very quiet on this front, even though he was attacked by Trump specifically last year on the cost of renovating the Fed headquarters, he's been very quiet. Until this year, he came out with a pre-recorded 2-minute video saying that they are still setting interest rates accordingly to how they think, where they think rates should be. And they're not gonna, he was basically very defiant. He basically stood up to the bullying of Trump. So I think that was the first entertaining episodes of Keeping Up with the US this year. It then went on to Venezuela. There's a lot of conspiracy theorists saying that, they wanted Venezuelan oil, even though I'm quite doubtful about that, because even though Venezuela has a lot of oil reserves, it's quite hard to get them out of the ground. It will take years and billions of dollars to actually take them out of the ground. Basically, it's just not economically profitable to do that at the moment. So that was the second episode. Markets were a little bit rattled, not too much.
The funny thing about that one was that if it's not about oil, what is it about? It doesn't look like it was about establishing democracy in Venezuela, because there's no efforts being put into that. And it doesn't look like it was about getting Maduro, because just a little while back, they let another guy, the Honduran president, go, Hernandez, I think it was. He was sentenced in a US court to long time in jail for drug-related issues, and then let him go. So it doesn't look like drugs were the main issue either. I reckon you sort of narrow them down, you just end up with oil.
Well, it is, but again, I'm just not sure how effective it will be.
Yeah,
but yes, it does seem to be the
hard
most
to get the oil out.
Plausible explanation at the moment.
Or to just demonstrate how superior US military is.
Yeah, I mean,
which was then a pretext to do the Greenland thing.
I'm inclined to agree with that, because someone used to say that, the best way to unite a country is to go to war with another country. So yeah, that brings us to the next episode, which is Greenland. And Trump did call Greenland Iceland a few times. They wanted to get Greenland. Well, maybe because Greenland has quite a bit of rare earths reserves and minerals. But Trump said that it's not about minerals, it's about national security, because apparently Greenland is just too close to Russia. So that was interesting. Marcus did drop quite a bit on that day when he said that he would take Greenland, but I thought that was entertaining when Trump went to Davos the next day, and he said Share Marcus didn't like that, so he's just not going to take Greenland by force at all. He's not going to do that. So we passed that episode. It seems like everything's back to normal.
Yeah. I mean, the main thing through all of that was the additional from an economic point of view, was the additional tariffs. He was talking about 10% on Europe by February if they hadn't agreed to pass Greenland across. He connected it to the not getting of the Nobel Peace Prize. It was Norway's fault. And then the tariffs would go to 25% from June 1 if, again, no progress on Greenland. Then, of course, he backs down. I mean, many, of course, would say that it was just another taco moment. But then soon after, a week later, he's on to 100% tariffs on Canada in relation to Canada getting into a deal with China, a very narrow one, and then 25% tariff on Korea for not signing up to the trade deal from last year.
I think our view is that it's not likely that the 100% tariff or even the 25% tariff on Korea will be enacted, because it just seems to be a threat at the moment. Trump still kind of believes in the fact that if he threatens trading partners with this impossibly high tariffs, he'll get what he wants.
But you had a chart showing that only about 20% of Trump's tariff threats actually get implemented. He either tacos, as Trump always chickens out, or what's the other one?
There's a new trend nowadays, which is called tuna. Trump usually negates announcements, which has been the case in the past year.
Or he just forgets about them.
Yeah, a lot of times it's just basically a tweet on a Truth Social post. But speaking of Greenland or Iceland, it brings us to the next episode, which is ICE, the Immigration and Custom Enforcement Agency of the US. So there's been a lot of noise with that.
I've heard that the US, was it Homeland Security? They said that the media in the US shouldn't use the term ICE in relation to the weather because it might be associated with ICE, Immigration and Customs Enforcement
Agency.
But which is kind of odd, that it's like the administration worried that ICE will give the weather a bad name in a perverse sense.
But like either way, on the political spectrum that you're on, there's basically a lot of noise with the fact that ICE agents have killed 2 people over the past few weeks. There's been quite a lot of backlash, even from the MAGA base, against Trump administration of how, they enact these policies to lower immigration. And one thing that I thought that was interesting about this ICE episode is that the tuna or taco trade plays against. After a lot of the backlash, both Trump and Melania actually came out and said, both Donald Trump and Melania Trump came out and said that they want peace. They don't want violence. And they seem to back away from that a little bit. So I think, there's been definitely quite a lot of noise as we've basically detailed out in the past 5-10 minutes. But there's a common denominator here is that Trump, when there's a backlash either from the bond markets or the share markets or even from his support base, he comes out and negates it. It seems like he really worries about what the midterm election will be like in another few months.
It seems to me, you get 3 conclusions from all of this. One is he still faces constraints. Greenland wasn't popular politically in the US. Less than 20% of Americans agreed with the Greenland approach. He faces huge constraints in terms of affordability. The independents who switched back from the Republicans in November's elections, in the 2024 election into November, back to the Democrats, those independents are concerned about the rise in the cost of living in the US. A whole bunch of people moved across from the Democrats under Biden and Harris to Trump. Now they're going back the other way. And if he continues to pile on tariffs, then he realises that's going to make things worse for affordability and make it really hard for the Republicans to retain control of the House. Then you've got the courts in the US, Supreme Court, siding with the Lisa Cook in terms of her ability to stay at the Fed until her case has been heard, arguing against the view, or arguing with the view that this might threaten the Fed's independence if he can remove her. You've got the tariff case yet to come up. There's an argument that all of this tariff stuff will just lead to the Supreme Court disbarring Trump using the Emergency Powers Act to implement these tariffs. So you've got this sort of backlash occurring, which means Trump is under a lot of pressure. So the constraints may be holding in the US. I think there's another point that obviously geopolitics is going to be a big thing this year, as it has been for the last few years. And I think that's just a function of the rise of nationalism and populism, which maybe we can talk about a bit later. And then finally, each time Trump does one of these things, all the tariffs last year, the flipping and flopping, the attacks on the immigration system, which, by the way, has been a key source of the innovativeness and inventiveness of the US and dynamism of America, the attacks on the universities, the attacks on the rule of law, the attacks on the Fed, all of these things you could argue are chipping away at US exceptionalism. And while investors say, well, I can still see the profits out there, the economy's still growing, the Fed might cut interest rates, well and good, I'll still buy shares. So US shares are up, as we speak, they're up 1.9% year to date. But at the same time, they say, well, I'm a little bit nervous about things. I'm going to sell the US dollar and I'm going to buy gold.
It's quite interesting. I've seen this chart where, sure, if you're based in the US, you would have made a lot of money putting money into the US shares. But if you're a foreign investors and you converted that earnings from US shares into your local currency, a lot of times you would have lost money actually, given the decline in
the US dollar.
US dollar against a lot of other
It's
currencies.
down something like 11, 12% since Trump.
since the beginning of last
Trump
year.
came along. So it's interesting. Given that, flip it to the Australian dollar. The Aussie dollar has gone up from 62 or something to now around 70. So we all know the Aussie share market has underperformed the US share market over the course. Like last year, it did 10%. US shares did 16% in terms of total return. Whereas if you adjust for the exchange rate, the Aussie share market's doing slightly better than the US share market.
Which is interesting. I think this US debasement trend has also given way to the rise in gold and silver lately. Gold has basically more than doubled since the beginning of last year, and silver has gone up about 3.5 times actually.
I kind of think silver's playing a bit of catch up, but over the long term, gold's done better. But nevertheless, they both seem to be reflective of a desire for a safe haven, for a protection against the debasement of the US dollar.
Traditionally, it's always the US dollar. That's the safe haven.
Yeah. Well, normally it is, when you go through worrying periods. If I think about the GFC, the Aussie dollar went down, the US dollar went up. The crisis was in the US housing, but the US dollar went up. And often when you have these, when America's debt was downgraded, it was US bonds that rallied, and I think the US dollar at the same time. This was the initial downgrade from S&P back in 2011, I think it was. And the Aussie dollar goes down, even though the crisis was around the US. This time around, it's a little bit different because you could argue foreign investors are concerned that Trump is actually threatening the very fundamentals of the US. The rule of law, the universities, immigration. I'm not criticising getting immigration numbers under control. I think every government has to control it, but going further than that, to the point where foreigners say, well, where would I rather study now? Well, I might rather study in China than in the US. I mean, that's a perverse thing, and working against American interest in a long-term sense.
I think it's more like the unreliability as a trading partner as well from a lot of other countries. Like now you see, say, for example, Canada and China trying to lower tariffs on a lot of goods, whereas basically they're turning to China instead of the US. So maybe this, gold trade might still have a way to go if we keep continuing to see this kind of noise coming out from the White House in the next year.
I mean, they're all related to the fall in the US dollar. So it's investors say, the profits are still there, so I like the share market. That's okay. But I'm concerned about the US, and the US dollar goes down. And so then gold goes up on the back of that because gold is priced in US dollars, so is silver, and other currencies like the euro and the Aussie also go up, which is the flip side of the falling US dollar.
Maybe we should go down under. I mean, like when I first moved to Australia, people say that things are opposite here. And I feel like things are indeed opposite here compared to, the Northern Hemisphere at the moment.
Oh, yeah, we're upside down. We're on top of the world and they're on the bottom.
Well, say the US is still talking about rate cuts in the next year. And some other global central banks are basically still in their, towards the end, but they're still in their easing cycle. We're talking about rate hikes here in Australia, and the hike might come as early as February. It's a bit depressing. It is completely
funny stuff
the opposite.
happens in Australia. I was reading this book by Bill Bryson,
Oh, I love Bill Bryson. That's what I read on the flight here, actually. The first
learning
time.
about Australia.
Yeah, there's a book called In a Sunburned Country.
Did he tell you that we're the only country that actually lost a prime
The
minister?
war against emu?
No, we lost the prime minister. We lost the leader. We're the only country that's actually lost one. We don't know where they went.
Yeah,
or where he went.
swam out.
Well, he could have been taken by a submarine or whatever. Who knows what happened to him? But
Yes,
they don't
I do
know what
know.
happened to him.
Yeah.
Every other country you normally know what happens to your leader. In Australia, we don't know what happened to this guy.
But anyway, yes, we are in an opposite position right now that we're probably seeing a rate hike, literally just 6 months after the last rate cut.
Yeah.
Maybe this is like the shortest easing cycle ever.
An ABC journalist reminded me of this, that when you've had really sharp easings and then a quick reversal, or a short easing cycle and then a quick reversal, it's usually after a crisis. like the RBA cuts at the time of the pandemic, or in 2001, I think it was, or 1998, LTCM crisis, and then they realised, well, actually, they shouldn't have cut. Things weren't that bad. The 30% fall in the share market wasn't a guide to anything. And then next thing you know, they're hiking again. Whereas this time around, it's a bit unusual. We haven't had a crisis in the share market prompting a cut. So I'm sort of left with the view that the RBA still did the right thing last year. They cut 3 times because inflation was heading lower, wages growth was slowing, unemployment was in a rising trend. We'd been in a per capita recession for a couple of years. Global inflation was falling. And, their indicators suggested that monetary policy in Australia was on the tight side.
Yeah, but that was last year's story. I think this year, going to the next meeting, the RBA is faced with a very different prospect. We now have declining unemployment rate. It's now at 4.1%, contrary to 4.5% a few months ago. You have consumer spending, this is nominal spending, up 6.3% versus a year ago. And it's surprised on the upside for the last 2 months. And most importantly, you have inflation running rather red hot. It's actually running at 3.4% on the trimmed mean measure. That's an average for the last December quarter of Australia. So that's obviously way too high versus what the RBA wants it to be. The RBA wants to see an inflation number around 2.5%. So anywhere they go, they are faced with the prospect that maybe things are a bit hotter than where they needed to be. The economy is running above capacity. That's their language.
I mean, they're in a bit of a bind. I think it's difficult. If it had been 1 quarter of inflation surprise on the upside, you can look through it. Now we've had 2 quarters. They've also come out late last year with quite hawkish language, saying that putting a rate hike potentially on the table effectively. And we've also got stronger than expected jobs numbers. Last week, unemployment 4.1%. We thought it'd be 4.5. I think the markets were 4.4 or 4.3 or something. But whatever it is, it's a relatively low number, and you can question that as well as the CPI. But in the Reserve Bank's mind, you got this confluence of all these things coming together, and overall economic indicators, as you say, up until now have been reasonably strong. So it makes it hard for them not to hike in the week ahead.
Yeah. Do you think we'll have a long hiking cycle, or will it be a rather shallow one? Because to be fair, we had a pretty shallow cutting cycle as well, only 3 times.
Well, we did. No, I think one and done.
Yeah. But
I've been too dovish here. I was right to be dovish prior to the pandemic, and it paid off. But since the pandemic, I've been too dovish. I mean, I maybe I was right last year. You said that was right last year. They cut rates, but I mean, the reason I would say it would be one and done rather than the old cockroach analogy. You see a cockroach, there must be more out there. So normally when economists factor in a rate hike, they normally factor in another one 3 months later. The thing that sort of holds me back a little bit is that that chart you produce, which looks at the business surveys, final price indicators or output price indicators from NAB and the PMIs, Purchasing Managers Indicators, for December in NAB and January from the PMIs. They both show that output prices are pretty much under control. They're in the range they would be consistent with 2 to 3% inflation. There's no inflation spike there. If you look at the unemployment numbers, well and good, but if you look at job ads, employment growth has slowed down dramatically, and if you look at job ads, they'll look softish. Then you've got this problem that the one soft piece, you said all the data's been strong, but that was one soft thing, and that was consumer sentiment. The ANZ Roy Morgan index is quite weak, and the other one was in a nice recovery and then seems to have fallen back as soon as we started talking about rate hikes. So which to me, it all sort of confuses a little bit and suggests to me that if the RBA starts hiking, then some of that pickup we've been seeing in consumer spending may be snuffed out. And so therefore I think it's probably they do one hike, shot across the bows, and then things calm down again, and then I think inflation will start to cool again, not because of the one hike, but because some of the things that pushed it up proved to be an aberration, and we go back to the business surveys. and then the RBA could stay on hold the rest of the year.
I mean, I do agree. I think the prospects for more hikes seems to be quite murky. Just given how fragile the momentum has been, I don't think that consumer spending is exactly strong. The latest data point we had was until November. And since then, sentiment has basically dropped down a cliff just with the talk of rate hike, not even with a real rate hike. So hopefully the RBA can actually just hold after the next hike, which is our base case.
I mean, the problem is these days to get in the housing market, you've got to take on a huge mortgage, which makes it really hard. And therefore, small moves in interest rates are going to have a huge impact on people.
Yeah.
And that's, I think those people relaxed a little bit coming out of 2024 because we had the 3 rate cuts. And then now if we're going back to, like even one hike means that only 2 of the 13 hikes that we saw between 2022 and 2023 would have been reversed. So we've come into a much higher interest rate environment that people a few years ago would have anticipated.
Basically, new home buyers are a bit more leveraged than before.
Which, yeah, surely it should be a constraint on things. I mean, the thing that surprises me is that I get out there and I still see lots of people spending. But you sort of wonder whether that was predicated on rates not going up or rates going down. And then now the environment turns out to be a lot different. And they actually then have to cut back again.
Anyway, we need to end on a happy note. So each of us, let's give one reason for investors to be positive about this year. Because I think for me, the number one reason that people should be positive about is that the Fed is going to cut rates. That's going to be positive for shares. And the earnings picture in the US is still quite positive, especially including the tech companies. The AI story probably has a few more years to go.
Yeah, for me, I think there's lots of reasons to be positive. Apart from the fact that background behind you is super blue and lots of green out there. Sydney's looking nice and pristine. But just think about it. There's all this stuff occurring in the US, which is disturbing, but there's a robustness in the US, and US institutions generally are holding and acting as a constraint. But more broadly, if you look at the picture globally, you've got good global growth. That's probably going to continue. As you said, the Fed might still cut interest rates, not next week, but in the months ahead as the remainder of the year goes by. And profit growth, I think, will remain strong. So I would totally agree with those things. And yes, we find that midterm election years, because this is a midterm election year, can be more volatile, but they usually create great buying opportunities, and you get this huge rally into the end of the year. Well, we've already started the year on a positive note. I wouldn't be at all surprised we go through a bit of volatility, but then coming out of those midterm elections into year end, we'll see good gains. And so I'm reasonably upbeat on markets this year. I mean, sure, we're going to see volatility. Sure, it might be more constrained. Sure, there's lots of things to worry about. There always is. You can always rave on about Trump and higher interest rates and all this sort of stuff in Australia. But the broader picture, I think, is still a reasonably good one. So thanks, mate.
Thank you, Shane.
See ya.